Hi, let's talk about NextGen Acquisition company. It's a SPAC company with a market cap over 400 million, reaching almost 500 million. The company's earnings are forecasted to grow over 67% per year, and there's also risks, has less than 1 year of cash runaway because it's pretty much the SPAC company, so they putting just shares. Yeah, currently the shares outstanding is 43 million. So yeah, they have less than 3 years of financial data available. Usually the SPAC companies does not have any fundamental financial results because they are pretty much just printing the stocks out to collect the cash and acquire or merge with some of the company in real sector or other companies that is making value. Latest share price, so it's highly volatile share, I would say, because they had this peak in February, in mid-February, as many companies, so they reached on 34% up. They also loaded them in 22nd February, are currently sitting in minus 28% of returns. That's why it's highly volatile, and be careful, but the volumes are currently pretty much on the same level, so 600, 185k even. So last big movements were in February, as I said, 17 million volumes, 13 millions, and this is on they entered the IPO. Yeah, so there's the volumes, pretty high volumes there, or actually not, but the price went pretty high. So the highest point, $16. This is actually one of the SPAC companies usually do have some of the upsides, and based on, let's look at the market performance first. So 90 days return minus 5.6%. Of course, not beating the industry, neither the market. And long-term price volatility, it's not given calculated within the, because there is needed to be 5-year volatility relative to market. Valuation side, simple Wall Street, neither the tip ranks does not have any price target, but I found on the Market Watch stock price target currently on average $22 per share. So they have pretty much the stock could double itself. So there is possibilities that it would do the same as it did in February, only if they will find the company that they would be merging with. And I see pretty much there's the same level through the month, so this is actually not moving any around, and only if there is coming some of the news, the volumes are getting pretty high. So whenever you investing or searching for the investment, this could be like on early stage good company, but also it could decrease even to like $5 if they're not finding any kind of companies that they would acquire or merge with. But let's continue. Future growth, yeah, so it's the and I'm kind of not sure where this come from. So 67% annual earning growth forecasted, but they are not producing any kind of they're not selling, I guess. Yeah, total sales like nothing. So I'm not quite sure what's the number coming from. Past performance, annual earning but he's also increased 15%, but there's earnings minus 16 million. The company is currently unprofitable. This is actually one of the SPAC companies' negative side, because they are not possible to calculate any financial data. So we see here the debt to equity ratio. The company is debt free. They're just printing the shares out to put the cash, and they have cash only 821K, so less than a million currently. Balance sheet looks green, as usually SPAC companies do. Of course, they're not paying dividends. Dividends from the shareholders' entered money. No insider volumes, ownership breakdown. Institutions holding mostly 53%, private companies 20%, general public almost 20%, hedge funds 6.4%, public companies 0.2%. Top shareholders, we see some of the firms added pretty well, but some of them decreased, mostly green. Citadel Advisors 244, last reporting holding late last month they added. So this is kindly evaluated information we see here, but some of them decreasing. So this actually one of the things is concerning. But anyway, if there's for example, you see that the companies, institutions adding the stock, and you see that the level that they adding is the same. I think it's a good deal to add it as well, but as it's highly volatile share price, do not try to invest more than 1% of your portfolio, because there is risks to lose like 28%, 30, 40, 50%, 80 in some of the cases. And anyway, investing.com, summary the stock for long-term investors as a neutral. By moving average is a sell, and technical indicators as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.